Hi guys, welcome to Glory Investing Show. Today, I will show you my best dividend income strategy for early retirement. Watch this video till the end to find out how I am able to have a passive income without working for it. If you could destroy that like button for me, I would appreciate it so much. Before you choose this strategy for yourself, there is a couple of things we need to talk about. This graphic is my guidance for all new dividend investors. You need to know what you're getting into, and I will be honest with you as much as I can. The whole point of investing now is so we can retire early and not be dependent on one income source. If you choose to use dividends as your tool to succeed, you need to listen carefully now. Do your own research. Go through financial books of companies. Watch their revenue, their expenses, and their payout ratio. Payout ratio is one of the most important stats within the world of dividends. It is used to determine whether or not a company's current earnings can adequately support the dividend amount. A ratio over 100% means a firm is paying out more than it's taking in. Typically a red flag. I learned this the hard way, so please pay attention. One of the biggest mistakes you can make is chasing high-yield dividends. Stock can lose value over time, and before you know it, you are in the hole with your capital gains. Stock price declines and its yield bumps up. That is called value trap. For me, a classic example is AT&T. I know that I will get a lot of hate for this, but I need to be honest with you guys. Many investors out there say that this company is one of their favorites, but I am staying as far as I can from AT&T. AT&T is having high dividend yield with 7.58% with a dividend growth history of 20 years. But if we check the last 20 years of this stock, we will see that they are down. This is a classic value trap. One more thing, guys. Please don't make dividend stocks your only priority. You will be missing big gains on new stocks, so stay open-minded. The best thing about dividend stocks is predictable income. You know exactly when you're getting that paycheck. Of course, some of you will say, "But I am only making $2,000 per month. How am I supposed to pay my bills and have money to invest in stocks?" These days, it is all about prioritizing. If your income source is too low for your needs, you need to increase it. There's no other way to sugarcoat this. We live in a world where everything from food, bills, payments, furniture, clothes, etc. can be bought or paid by one single click. If you are not tech smart, you can always get a side hustle at Uber, Lyft, DoorDash, and many others. Here are 60 side hustles that you can do from home. There is no reason why you should waste your time and complain that you don't have enough to invest. I am pretty sure that some of you are already deep in investments and have more than one source of income, but for the rest of you, there are no excuses. The average person lives around 78 years. And this graphic is a perfect example of how much time people waste on things that are not improving them or their income situation. And of course, eliminate your debt as soon as possible. Don't even think about investing in 3% dividend yield stock if you have $100,000 student loan with 11% interest rate. The average student loan in the US in 2020 is $37,172. There is a lot of other bad debt people put themselves into, but student loans are absolutely worse than anything else. You know how you can have a bad snowball effect with debt you cannot get rid of? You can also have a good one with dividend income, for example. Let's see what happens with one penny that doubled every day for 30 days. I know that 30 days sounds a little bit crazy, but what if, instead of days, we take 30 years? Can you double your investment every year? The answer is yes. I know you guys can't wait to see my 3-stock strategy, so let's go into it right away. And if you guys like more videos like this, check my playlist and you will find more different 3-stock examples. The first stock for today is Medtronic. Medtronic is an American Irish-domiciled medical device company that generates the majority of its sales and profits from the US healthcare system. We need approximately 1750 shares of MDT to generate annual income of approximately $4,000. The next stock is General Dynamics. General Dynamics Corporation is an American aerospace and defense corporation. As of 2019, it was the 5th largest defense contractor in the United States and the 6th largest in the world. We need approximately 915 shares of GD to generate annual income of approximately $4,000. Last but not the least, we have Target. I believe everyone heard about this one. We need approximately 1,500 shares of TGT to generate annual income of approximately $4,000. You can see what the approximate number of shares you need for $1,000 monthly income. And please, pay close attention to dividend cuts. If you have a portfolio of only 3 dividend stocks, it would be easy to keep track of everything that is happening. If you still didn't start investing, I will leave you a link below for one free stock with Robinhood. Love you all. Don't forget to smash that like button, and I'll see you next week, guys. Subscribe to support the channel. It would mean a lot to me.